Hi, I'm Jordan Sibley with the Sibley Group at Keller Williams Realty. I'm here at NOLA Lending today with Coleena Wolfe.
Hi.
And we're going to talk a little bit about a physician loan. So talk to me about specifically what that is. Is the formal name a physician loan?
It actually is. If you want to add it there, you can add physician portfolio loan,
Okay.
but it's a bank-owned product. It's not conventionally financed. It's not Federal Housing Association. It's literally a bank portfolio product. That's why it's not offered everywhere.
Okay.
Only specific banks that are lending will do a physician's loan.
Okay. And then what is the criteria with NOLA Lending for this loan? Do they have to be a resident already? Can they be in med school or a physician for several years? What's kind of the baseline criteria?
They need to be out of med school, so they can be in their residency. They can be entry-level residents. So if they graduate in May, they're applicable. If they're starting a residency in August, for instance. And then up to 2 years post-fellowship, postgraduate.
Okay.
So they can be practicing for 2 years and still qualify for this program.
Okay, but if they've been practicing beyond 2 years, this is not the type of product.
This is not the type of product for them. They would need to do a more conventional, traditional loan product.
Okay, perfect. Another question, what about dentists and veterinarians? Are they included?
We are including dentists and chiropractors. We're still working on veterinarians. It's not out of the question. We just haven't had that application come up to even take it to a board. But I would think that veterinarians would be something we'd be looking forward to do. We just don't have that application. So yes, physicians, dentists, chiropractors, any kind of medical professional in that capacity.
Okay, I didn't know about chiropractors. So
Yeah,
that's good to know.
we count them as doctors.
Perfect. All right. What is, and I know this might depend on the individual situation, but what is the maximum amount that can be financed?
We'll finance up to $2.5 million.
Okay.
On a physician's loan. That's no money down.
Okay.
That's 100% financing. Obviously, you have to have the income to support that
Sure.
type of loan. But we'll do anything from $50,000 to $2.5 million.
Wow, that is it. That's great. And with 0% down, I'm assuming that the interest rates are a little higher than normal. How does that work?
Not really. They're comparable to what you would expect from a portfolio perspective.
Okay.
You have to remember when you're doing conventional financing, those mortgages are insured by Fannie Mae and Freddie Mac. That's why those rates are so low. Same as with FHA, they're insured by Federal Housing Association and VA. So they're comparable to a portfolio loan. They are not fixed rate terms. They're not meant for permanent financing.
Okay.
So we have 3, 5, and 7/1 ARM physician loan products available where it would be fixed for that first term,
Okay.
and then thereafter would be adjustable once per year. And there are caps and floors, so you can't be 3% one day and 5% the next.
Right.
But again, it's meant for temporary financing. We're expecting that physician is going to be in a better position to refinance that product, maybe even sell that product once they finish residency and get into a different type of financing.
Okay, that makes sense. Well, for our established physicians, what's the next best option for them?
I would honestly say if it's a first-time home buyer, even if it's not a first-time home buyer, conventional is now offering 3% down. That's better than FHA.
Wow.
For a first-time
That's
home
really
buyer. There are options to not have PMI if you don't want to. So that is for a higher rate you can do without PMI. In New Orleans, I would say that you actually want the PMI because our properties are appreciating at a rate higher than almost anywhere else in the country. So that PMI factor will go away much quicker than if you just keep paying on it. Or if you accept a higher rate. It's not good to accept a higher rate for 30 years when your PMI may be gone in 2 or 3.
Okay. Well, I think that's about all of my questions. You've been so helpful. I think this
thank
is
you.
a great product.
It is. For someone who qualifies, you don't even have to be a first-time home buyer.
Yeah.
It just it makes home ownership a lot easier, especially for someone getting out of medical school and they have student loans, they're racking up, they just don't know how to do their finances, and they shouldn't have to pay rent just because they've invested in their education.
Yeah.
The other thing is if your student loans are going to be deferred for 12 months, we won't even include them in the equation as far as qualifying. And we'll also go off of income-based repayments for student loans, not necessarily what the maximum payment will be, because that won't be imposed on that physician for years to come.
Okay. Well, perfect. Thanks for the information.
You're welcome.
I really
Thanks, Jordan.
appreciate your time. It was good to meet you.
You too.
Thanks.